Once again, the ARCa Bulls trading team nails bottom targets and bear pressure appears to be diminishing. With the Fed decision favoring a 50 basis point rate cut, price action may be approaching a floor. Let's pop open the hood on charts to observe the higher probabilities for the next session. Welcome back to the channel on this Hump Day Wednesday. This is ARCa, and let's dive into AMC. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Please do me a favor, hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. Let's go ahead and take a look at AMC here on the 6-hour chart, where we are observing, once again, the bottom side targets approaching. And we nailed it, motherfucker, again, right? We were talking about a 476 potential bottom. The dead cat bounce was leading towards a 475. And if you can observe right up here in the OHLC, that your open, high, low, close valuations, hover over that candle, and you can see that 475 absolutely met, right? Completely awesome right here. The ARCa Bulls trading team nailing it again. Guys, I love you all so much. Make sure to hit that like button, right? So what is going on here with price, man? Is it just going to continue to capitulate forever and ever and ever? I don't know. But what I can say is that we're within the entry ranges. And if you did catch that small play today, 475 up to that 481, small scalp could have been around, I could say, a 15% gainer on options, right? Very close to expiry. I will say that I am also adding these levels here because I believe them to be a floor. Okay, now the way that I'm observing that potential floor is not only because of the, prior bar retraces or statistics leading towards a retracement on whatever time frame. It's nothing like that. It's actually more because of the shape of this inverse head and shoulders, right? So if we observe here these shoulders here and these shoulders here alongside the head right down here, that kind of shows, right? It shows that there could be a very, very bullish formation forming. Now, if we bring this down to a bi-hourly time frame, then you're going to start to see another bullish formation here, and that's your falling wedge, right? So we have a falling wedge here, the top side target on that triangle. We're already breaking out of the 65%, to the apex of the triangle, which could be down here. That target of this could lead anywhere between 491 to 495. I can see price action hit that because that's typically what price action does. We're looking at an ATR of about 19 cents, almost 20 cents. What does that mean? The average true range, any day that this asset trades, we can observe a 20-cent upside or downside, right? So let's go ahead and bring this up to the 4-hour time frame or even the 6-hour time frame, where we can then see this side, right? So I can see, guys, you're gonna be able to observe here a million different formations, right? In fact, right here, this was an inverse head and shoulders here. It looks like it failed, right? But did it actually fail? Because regression is leading towards the downside here on the bottom side, right? That could be your second leg down here, which could be the second leg up here. So this is your shoulder left, shoulder right, and bounce, right? And then we have the head. So it really will be in the eyes of the beholder. So, but what I will say too is that you shouldn't ever force a formation. Okay, so let me get the drawings right back in here and see what's up. All right, so we're talking about a potential 470 bottom. It's not random. The 470 bottom is set down here via my discretion because of this low wick here, right? The weekly low down at around 472. Cool. We have several other candles opening right at that 470 bottom. Lots of wicks happening there, and also this daily time frame. Let's get rid of all of the drawings here and add the moving averages. Daily time frame, SMA 200 is located at 470 as well. Now, I could see why price action feels like we're at a floor is because we're bouncing off of the SMA 100 on a daily as well. That's all good. That's all fine and dandy, but I mean, which one has the higher probability of retracement? I think it would be the SMA 200. Everyone observes the SMA 200. Right? So if that is the case, then the SMA 200 falls in line with the shoulders of the inverse head and shoulders. It looks like it falls in line within the discretion that I personally put together with all of those other candles connecting to that 470 bottom down here. And also it does connect pretty good with the with an ATR. I guess if it is going to be an ATR, then maybe a 4-hour time frame ATR or an 8-hour ATR would do it. So around 12 cents, maybe a 6-hour. Let's see, the 6-hour ATR is at 10 cents, right? So there you go. 480 to 470 could be that 6-hour ATR. The reason why I say this is because we just moved up 50% prior bar retrace, SMA 5 confluence for resistance, continuation to the downside. So if that is actually going to happen, then yeah, we may have to observe the 6-hour time frame here as the higher probability time frame to use for a potential bounce. And 6 hours looks pretty damn good with that inverse head and shoulders as well, getting rid of all those moving averages and all this crap everywhere. Yeah. Okay, so what's the measured move on that inverse head and shoulders? Well, we've already measured it before. And if we are able to succeed that inverse head and shoulders, then you're looking at a topside target of around 558. The next thing we want to look at is the statistical side of the analysis, because around 558, we absolutely have the statistical probability. If we fired off the signal, from a historical volatility versus momentum backtest, right? We backtested this, the entire trading history of the daily time frame here on the AMC asset. The signal hasn't fired yet, okay? It has not fired. So that first upper bound, I'm talking about, this was measured by, I think, Buzzman, right? I believe this, or was it Buzzman or was it Daya? One of the two of my master students have been, well, actually 3 to 4 master students have been absolutely performing well here with their back testing and their learnings from the master's course. So the upper bound of, your regular standard move here, your average upside, right? Being around, let's see, where do they have their, 11.63% upside here with an upside accuracy of about almost 74%. There it is. It's sitting right here at 559. We just talked about that target to the upside. And that's going to be your inverse head and shoulders target, 558. So we have confluence now, psychological against statistical. But the statistical side has not fired yet. Okay? What is the criteria? We need the volatility component, which is the histogram, right? These little bulbs here. And the moving average, the teal line. Both of them pivoted with an upside posturing, right? And beyond the 15% of critical contraction. We need this to be breaking, entering the expansion phase, and that would trigger the signal here for the 73.43% probabilities of an 11.63% move to the upside, equivalent to the top side of the inverse head and shoulders. Okay, so if that's going to be it, you have the loading zone. You've remembered these, okay? Remember, I'm looking at a potential bottom side. We're already curving on a 4-hour time frame down here, right? We're already looking like we're going to move that. We're going to make that upside. Check it out. Here it is. Expansion starting, and we're already getting that curl on stochastic momentum. It doesn't mean that there isn't any further downside. It's a 4-hour time frame. That means anything can happen within 4 hours and this still would be fine, right? So it's relative. So you know the bottom side targets. Now, guys, the reason why I know this is because I am a trading instructor. Make sure to get in touch with me at ArcMastersCourse at Gmail immediately. I want you to make a difference in your portfolio. I want you to make a difference in your trading career. Be disciplined. If there's any better investment out there, let me know. But I think it's yourself that should be it, right? The beginner's charting, and it really is for beginners. The beginner's charting and trading mentorship is going to start here in about a week and a half, a week. The seats are getting taken. Make sure to get in touch with me ASAP so that you can claim your seat and enroll. All right, you guys? I think this is a pretty good place to leave off. If any questions or concerns, let me know. I'm here for you. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Ever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very, very good rest of your night and or day. And I will catch you at the bell mañana. Adios.